A major advantage of candlestick signals is that it shows where there's reversal signals potential, but we also have indicators that we can apply to candlestick analysis that will tell us when a trend has reversed or not. Very simply stated, if you see a candlestick buy signal and a close above the T-line, this black line, the 8 exponential moving average, your uptrend will continue as long as you don't close below the T-line after a candlestick sell signal. We saw that basically happen on Friday, where Thursday we had a doji following a little hanging man. Friday we saw selling in the Dow that closed it just below the T-line. Now the question became, do we start taking profits here and look for a pullback, or are we still in an uptrend? To be in an uptrend, we needed to see a positive open today on Monday and a close above the T-line, which we saw. Assessing what the general market trend is going to do is also well defined when using multiple indices, such as the Dow, the Nasdaq, and the S&P 500. The day the Dow was down below the T-line, the Nasdaq had pulled back, but notice it did a doji, and it was still above the T-line. The basic rule is you're in an uptrend until you see a candlestick sell signal and a close below the T-line. In this case, it didn't do it. Additionally, the benefit we have from candlestick analysis is we can see what's actually happening during the day. In this case, this doji here had a very slight green body, which meant they closed it above where they opened it, which essentially means that after they opened the trading on Friday, that by the end of the day, there were still buyers around that closed it above where it opened. That told us that there wasn't any mass selling going on. Monday, we see a gap up that puts the trading right back into the middle of the trading range. However, we would have been very well alerted with the fact that if we'd woken up on Monday and found that the pre-market futures were down, that would have gave us some very simple trading rules. The Dow would have been trading down below the further down below the T-line. The Nasdaq would have opened in the direction of how they were going to trade it after a doji. If it opened lower, that told us we were probably going down through the T-line also on the Nasdaq. Lower opens in the pre-market futures this morning would have warranted closing out positions that were starting to turn over or not showing any great strength. This is all just simple analysis by knowing what information is put into each candlestick signal. And knowing that we're in a slow, steady uptrend puts us in positions where we can take advantage of the slow curve. This slow curving uptrend off the T-line put us in the position to be able to take advantage of this move, which is usually the enthusiasm build up or whatever news was being built into the price of the stock down here finally consummated and had a 45% gain. And being able to identify what the signal or the patterns are doing and knowing that the market is not turning yet allows for good upside potential trades. A small price stock that we're looking at or been buying, ENER, the slow rounding bottom. Now we're getting up into the enthusiastic stage. In this case, it looks like earnings are going to be announced fairly soon. This also has the potential of having a big spike to the upside. Not necessarily that it will, but the probabilities based upon entering patterns that we know are building up strength just puts us in positions where the probabilities are greatly in our favor that we can make good money off of that trade. That'll be it. We'll see you in the chat rooms.